Hello. Yes, good evening, everybody. I hope you can hear my voice and also see my screen clearly. Today is 23rd. This is 23rd of June. So today, basically, I want us to build on the previous webinar on price action. There is one thing which should be clear by now, that if you're just trading based on the indicators, you are missing a lot, because you need to understand that the indicators, most of them are actually built from price action. So whatever you have as the indicator, maybe it's the MACD, it's the moving average, it's the ADX, whatever you call it, most of them, including the custom indicators, are basically built on the price action. A few are built independent of price action, but most of them, especially the custom indicators, are built based on the price action. So this is something which I think all of us need it. If you want to understand price action very, very well, you must understand your levels. Understand that in the Forex market, we do have diagonal levels. We do have horizontal levels. Those are the first two things. I put them as one because they are really, really useful. They are diagonal levels, and then they are resistance levels. When you have something like this, there's a line there, just that it's white, so that's why you're not able to see it. You have something like this. You have something like this. This is a very good resistance level. Look at it. On this date, the price came to this point, bounced off from it, it went down, it came back, went down, it came back, went down. So this is a resistance level. Whenever you want to do price action, understand that anytime the price approaches a level like this, it tends to reverse from that level. And anytime the price breaches that level to the upper side, it tends to continue in that direction. So when you have like a level like this is a resistance level. One of the most important elements that makes this level significant is the way the candles react to that level. That is, a candle will move to this point, form a long tail, get to that point, a long tail, get to that end, a long tail. And another thing, around the same place, you'll find that there are candles which shows indecision, which means that there's no decision. We are basically struggling. We don't know whether the price should continue up or go down. So these are known as the indecision candles. What they mean is we are not decided. It's like the price moves up, 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 up. And when it approaches this level, it fails to, like, we now don't know exactly whether it should continue up or we should go to the lower side. This is the first sign that the level is significant. When you have your level like this and then the price comes to it, you see some long tails, you see indecision candles, and these candles with long tails are actually known as the pinback candles. They show you rejection. There's like a strong rejection from this level here. If the price gets to this level in the future, we're likely going to see a reversal from it. So this becomes your good place to look for a sell from. We'll get another example. There's another level here. Sorry about that. Have that. We have this a level here. Yeah. So this is like you can see this. The price went up. It came back the first time, the second time, and the third time. This becomes a support. And then you have another one here. So as I said, you can see the same thing happening. We do have some rejection. We do have a rejection. We do have a rejection. And we expect that if the price breaks above this level, then the same place is always the correct place to look for a trade. So this is like another element of price action trading. You'll have a good level. The price goes above it. It comes back. This becomes a good place to look for a buy from. So this will give us the ideal place to look for a buy from. This will give us an ideal place to look for a buy from. So when you have a level like this where the price keeps using the same place as a reversal from a reversal point, it reversed the first time, the second time, the third time, the fourth time, then it has broken above it. When the price comes back to the same place, that becomes a good place to look for a buy from. So that's why I have these arrows here to mean that the price should continue up after this breakout. We also have another example here. This may not look very clear, but you will see it once I have it drawn. We have this, and then you have this. So this is like some support here, some support, some support, some support, some support, some support, some support, and then there is this break below. So when this happens, when the price breaks below your level, wait for it to come back to the same place, then pick a sell. So when the price has gone below this point, you wait for this retracement, then you pick a sell, expect that sell to push price even lower. So this is one aspect of price action. When you first of all identify a level, ensure that that level has been used previously, ensure that the same level has been used either as a support or as a resistance, and then when the price gets to the same place, now you look for a trade. So we'll identify a good resistance level, wait for price to break above it. If the price pulls back to the same place from the upper side, then that will give us the correct place to look for a buy from. So ideally, we want to see a good level, and as I've said, a good level should have like it should have these characteristics. We need to have indecision candles, it needs to have rejection candles, and if that level is to be broken, then we need to have a clear breakout candle. That is, if for example we do have a support here, then the price opened somewhere here and has closed below it with a big candle, then that is a sign that now we are continuing to the lower side. So when the price has broken below that level, you want to see some pullback before the price can proceed even lower. So this will give us the ideal place to look for a sell from. And when the price gets back to the same place, these are potential sell places. These are sell places, a sell place, a sell place, and a sell place. So somehow the price couldn't make it back to the same place. But if the price had come back to the same place, then that could have been the correct place to look for a sell from. So this is horizontally. Diagonally, there is still some resistance levels like this one. You can see the same place used here. When the price has used this for the first time, you don't know if this are a resistance or not. The price goes down, comes back to the same place. Now this now makes sense, the price goes down. So when this has happened the first time and the second time, you draw a line touching these two lines. So you draw a line touching these 2 points, this one and this, and then you extrapolate it. So this will give you the correct place to look for a sell from. The fourth one is a sell place, and when the price breaks above, this is now a buy place. Is that okay? So if the price breaks above, you look for a buy. This is one way you want to get it the correct way. Wait for price to break beyond a significant level. When you're doing a trend line, you don't have to wait for a pullback. You can just buy immediately the price breaks above, especially if that candle is not very big. So if we have a breakout and the candle is not very big, that's your stop loss is going to be placed relatively at a smaller place, you're going to risk less, then that is it's a good buy. But if it is here and the stop loss is somewhere here, you notice that this is way too long, then that is now not very good for you. So this is different from where we have horizontal levels, because when we're doing the horizontal levels, the price needs to break below, retrace back before it continues down. In this case here, when the price has gone above a level, we leave it there. That's we pick the trade immediately. Let's get another one. This is another very good level, horizontal level here. Look at how nicely the price acted to this level. So another thing, I don't know that we know this already, that anytime the price is approaching a level, don't be quick to enter trade just because the same level was used previously. Don't be in a hurry to enter trade just because that level was used previously. Instead, wait for price to show you a sign that we are now exhausted, like this pin bar here. Then you can now pick the sell. If that does not happen, there is no entry. So you have to wait for a clear sign that this is now a sell, then you enter the sell position. Well, let's look at an example for a buy. I mean, a diagonal trend line support. Look at this here. So we do have a level here as support. As support, the price gets to this point. It even gives us some pin bar for a buy. You buy it immediately. So when you buy there, hold on to that buy. And as you can see, this what the price has gone exactly as we want it. So this is another way. Look for levels like this and look for the candles which I've mentioned. The same candles you look for when you're doing the horizontal trading is the same candles you look for when you're doing the diagonal trading. So thank you very much. That should bring us to the end. I will look at the other two next time. That should bring us to the end of today's analysis. We'll meet again next week at the same time. So thank you. See you.